Down at the World Outlook Conference live, that's the ambient noise you're hearing in the background. Very pleased to have with me now Jeff Olin. He's Vision Capital Corporation, the founding of Vision Capital Corporation. And I just want to share a couple of things with you. One of the things I do down here, or do generally, is I look for people who are really good at what they do. Well, Vision Opportunity Fund, I'm just looking at its performance here since July 2nd, 2008. That's when it launched to January 31st, 2017, it's up 231.7%. My goodness. Boy, I compare that with like the S&P TSX Composite Index. That's up 41%. Vision Opportunity Fund, 231%. I mean, outperforming all of these indexes, and he does it really through real estate and the stock market. And Jeff, thanks so much for coming to the World Outlook Conference, and thanks for taking time for us this morning.
Thanks for having me, and congratulations on a fabulous conference. I see a lot of excitement here.
Yeah, let's talk about, this is the question ever, how did you do it? That kind of thing. How did you do it? But no, really, tell us a little bit about your approach, because when I first became aware of what you were doing, I found it very unique within the marketplace.
Well, firstly, how did we do it and what do we do? I mean, we got three senior guys, Frank Mayer, Andrew Moffs, and I have done one thing in our entire lives. We have combined 90 years experience in only doing one thing, which is focused on real estate from various vantage points, from direct property, from being research analysts, from being portfolio managers. And what we do is we focus on the underlying net asset value of the real estate. What is that real estate worth in the property market? If you add up all the sum of the value of the properties and you deduct all the debt, what is that worth per share? And then we compare it to what the stock price is trading at in the stock market. And what you find when you do that, because of certain inefficiencies, which we can talk about at length another time, you can buy real estate cheaper in the stock market than you can in the property market selectively, and you find overvalued securities, and we have the ability to short, so benefit from the decline in price by selling short overvalued securities, and it also reduces risk. So we're as much focused on managing risk as we are performance. Thank God both have been pretty strong over the last 9 years. Yeah,
what's so interesting, though, is I remember we shared with our audience going back a few years, you did not like the Calgary office market.
Correct.
So there's a great example. You shared that. We're going back a few years now, and you said, no, that's a market I don't like for whatever reasons. It's not personal. We love Calgary, but
right.
not that property, the commercial market. And so you said, well, we're shorting this, and we're playing this to go down. And it's a great example because you made a killing on that.
It's a perfect example of what we do and how we spend our time at Vision. We had no idea in 2013 that oil prices were going to crater, over a year later. We had no idea that, an NDP government was going to win, and some people thought there'd be a pall in the business climate, taking out any political views. That was just a fact impacting the market. What we did know is that there was 5 million square feet of new office space being built, a lot of supply at the same time demand was muted before oil prices cratered. And that's what we do. We focus on supply and demand fundamentals by property type and geographic region. And so, we focused on a REIT called Dream Office REIT, and we had nothing against the management there and quality of real estate, but they were heavily concentrated in those markets. So when we shorted that, it was our number one attribution to our performance in 2015. Yeah,
it's good, as I say, a great example. Let me go to other stuff I know you do. I mean, you were looking at the U.S. Property market, of course.
Yes, sir.
And finding situations that you felt were undervalued, especially in the multi-unit, I guess.
Multi-apartments. Yeah, I mean, we own a significant, in fact, there was a press release we had to file. We own 10% of a company called Pure Multifamily REIT, which is RUF in Toronto. Trades in both Canadian and U.S. dollars in the Toronto Stock Exchange. But this is 100% U.S. apartments in the best markets in terms of population growth and employment growth in North America. Dallas, Texas, San Antonio, Austin, Texas, Phoenix. They created more jobs down there in Dallas than the whole country of Canada last year. And this apartments, Class A apartments, and you can buy that in Canada. And so, there's powerful demographic and secular factors supporting rental apartments. The millennials, 66 million of them between the ages of 18 and 34 years of age right now. That's bigger than the baby boomers. So, and they live in apartments. So
yeah, it's fascinating. But now I want you to talk a little bit about playing them through the stock market. People sort of understand, okay, if they have the wherewithal, I'm going to buy an apartment building. But you're not doing it that way.
No, I mean, let's go back to pures. I mean, we think the stock's worth, $8 a share. No, not we think. We've done detailed models. We've toured every asset. It's trading at $6.50. So the first thing is, again, you can buy a collection of properties that worth $8 a share at $6.50. You can't do that in the property market. You can't buy real estate at a discount in the property market. But the opposite is true. You can't short an office building or an apartment building or a shopping center. So when they're overvalued or fundamentals, we can do that. And at the same time, you get professional management, you get corporate governance, you get transparency, and you have liquidity. Mm-hmm. We went from being bullish in Alberta to bearish in Alberta to 10 days. Guys that owns a lot of bricks and mortar, you can't do that. Mm-hmm. You can do that. You get that diversity, quality management, and nobody calls in the middle of the night to fix the heater.
Yeah, absolutely right. I'm talking with Jeff Olin, Vision Opportunity Fund, Vision Capital. Jeff, let me just talk about this environment that you find yourself in today. A lot of talk will be at this conference, has been already, about the impact of Donald Trump, for example. And I know that's a broad generalization, but how do you factor in that kind of stuff? Do you actually wait for policy announcements and see, is that going to affect our stuff? Or
you saw a spike in interest rates, and to me that's the most overplayed perception in terms of a negative perception, the real estate increasing interest rates. First of all, we're not experts on predicting interest rates, so we don't do it. My own personal view is you're not likely to see the 10-year bond in the U.S. above the level of 3%, 3.25%, and we're a long way from there right now, unless you have inflation. I'm not saying you're going to have inflation, but unless you have inflation, there's no real reason that it's going to go beyond that. If you have inflation, that's great for real estate. It's a hard asset. Replacement cost values go up. That's great for real estate. And the irony is, why are interest rates going up? Because Donald Trump got elected and he talked about jobs, and an improving economy. And if he achieves that, that's great for real estate. The number one factor for real estate on the demand side is jobs. If you got a job, you can buy a house. You're renting an apartment. You're working in a shopping center. You're buying stuff in a shopping center or in an office building. So jobs are good for real estate. So if rates go up because of a credit crisis, brutal for real estate. If rates go up because of inflation or improving economy, that's good for real estate.
That's a great distinction, and I'm glad we're sharing that with the audience. Just let me quickly get into the Canadian general market. I mean, as we've already outlined, you buy stocks that would be investing in the Canadian market, but do you have a view of the Canadian market? I mean, I'm watching how in British Columbia with the foreign buyers tax, we have a vacancy tax. We see the new mortgage rule change, the new insurance for mortgages changes. Again, how does that affect what you're doing in Canada?
We have 80% of our net exposure in the United States. And we like apartments, both sides of the border. We talked about that. We like industrial real estate. There's a new TV show. I don't watch it, but Orange is the New Black. Well, if Orange is the New Black, industrial is new retail. Logistics, e-commerce space, the growth in that area is going to be incredible. You need 3 square feet of warehouse space for an e-commerce retailer related to every square feet you need for bricks and mortar. And so we like that space. We own in Canada a pure industrial REIT. We own Prologis, the $30 billion New York Stock Exchange company, listed best company globally in the space. So we like industrial. We continue to be short Canadian office. Every office market in Canada is overbuilt, including here in Vancouver. And we have no retail in our portfolio today for e-commerce implications, other than we do own some general growth properties in the U.S., which is worth $36 a share, trading at $24. So that's a bit of our outlook in positioning. We like seniors housing in Canada. None of us are getting any younger. Yeah. Leading edge of the baby boom turned 65 in 2011. So we like that space. Supply in Canada is pretty much in balance, and you're going to see growth in that area. So that's a bit of our outlook and positioning.
Yeah, it's such a fascinating approach, and as you know, I've been a big fan of that approach. I mean, well, you know what? It's straightforward to understand. I remember you telling us, our audience, about Morguard Trust years ago. Again, yes. A very simple story. It's worth 200 and it's selling at 100. You know,
yeah, Morguard
whatever
Corp,
it is.
Right?
Morguard Corp
versus Morguard REIT.
Yes, thank you.
Yeah, Morguard Corp, and we spotted at 40. It's trading at 180, and you know why? because it has a 60-cent dividend, $180 share price, and so people focused on the REIT, and investment dealers focused on the REIT because they're paying out all the cash flow, need to raise money and pay investment dealers a lot of fees, and so the analysts covered the REIT, and the brokers talked about the REIT, and it paid the dividend, and they ignored the Corp, whereas the Corp was a superior investment.
Yeah. Great stuff with Jeff Olin. He's going to be with me later on today at the All-Star panel to wrap up the World Outlook Conference. Gave a tremendous speech yesterday, standing room only, I might add, yesterday. Jeff, thank you for taking the time.
Thanks for your time, and congratulations on a great conference.
Thanks very much. And again, Vision Opportunity Fund, as I say, I'm looking at all sorts of areas, but this is one that I found fascinating because of I started with the track record, 231.7% since inception, and what do I say other than that's impressive when you compare it, especially with the S&P or the standard, TSE Composite Index at 41.6.